Yo, what's going on? I'm going to show you a couple of dividend stocks that are actually on sale right now, and in my opinion, are at good buying opportunities. And without wasting any of your time, let's just get straight into it. Because the first stock I wanted to show you is actually ticker symbol KDP. You've probably heard of them, Keurig Dr Pepper. They own Keurig, like the little K cups and the machines, and they also own the patent for the K cups. So, or like those little cups you put in the coffee machine. So anytime someone wants to use it, they got to go through their patent and give them license revenue. But anyway, let's go ahead and look at this stock right here. It's down right now. If we look at it, it's almost like down from multi-year. It's at a 2-year low, but they're yielding 2.93% right now. So that's not bad for such a big company. Market cap of $41 billion. We all know them. Here's their dividend history. In 2020, it was 15 cents, and they just raised it from 20 cents to 21.5 cents. So let's go and look at the financials, because that's what's really more important. Cash flow per share. So this wasn't the greatest. So this is free cash flow per share. This lines up with the operating cash flow, which is down here. And for some reason, in the most 2 quarters, it's been down from their average normal huge revenue. So I'm not sure why. I'm sure if I looked into it, I could figure it out why. But I believe these two numbers right here are why the stock price is down. But anyway, if you look at their net income, 503 million in the most recent quarter, and then 400 million. And if we go to how much their dividend cost them, it literally only cost them $282 million. And of course, it just went up because they just rose their dividend. And if we go to their stock retirement program, they've actually been buying back just as much as they paid in dividends. They've been buying back just as much in stock. So especially right now, if they're buying back stock, that'll give some huge investor returns because the stock is so discounted right now. So if we go to their total common shares outstanding, you can barely see a difference because it's in billions, but it's down 1.35% from 1 year ago. And for a $41 billion market cap company, that's pretty good. So yeah, let me know your thoughts on ticker symbol KDP, and let's go ahead and get into the next dividend stock. All right, everyone. So for the next dividend stock on the list, it's actually ticker symbol DRI or Darden Restaurants. Now, you may not have heard of Darden, but you've definitely heard of their top, I guess, restaurants, which is Olive Garden, and you also got Longhorn Steakhouse. So they also have some other ones, but these are the two most popular ones, and they bring in some crazy revenue. Like Olive Garden makes up 46% of their revenue and $4.88 billion. But anyway, let's dig into the financials because that's what's important here. Darden is yielding 3.8%. So who doesn't want that yield? That's a pretty good yield. So let's go ahead and look at some of the financials here. So right away, we see net income slightly up from 1 year ago of 194 million. And if we go to their operating cash flow, down from 1 year ago, but that's okay. $269 million. And their assets to liabilities have grown and went from 10 billion 1 year ago to 11.2 billion when keeping the same leverage ratio just about. But yeah, let's look at the dividend cost. So their dividend actually only cost them $158 million, and it just went up because they just raised their dividend. And if we go to their stock retirement program, they have so much money left over that they're actually buying back their own stock, which I love to see. Dividend stocks that pay a dividend and do stock buybacks are my favorite ones because they usually have good price appreciation with them and not just dividend returns. So yeah, so if we go to their total common shares outstanding is down from 1 year ago. So hey, that's great to see. So yeah, that's ticker symbol DRI. Actually, let's see how much cash they have on hand because I like checking that, checking the cash on hand. So cash and equivalents, 192 million. Okay, so this isn't the best. It's actually one of the more lowest it's ever been. But still, $192 million. That's enough to cover 1 quarter of dividends. So they probably don't keep much cash on hand because they're buying back stock and they're paying dividends. But yeah, look at the price appreciation in this one. It did great. Obviously, it didn't do good when the pandemic fears happened because it's restaurants. But as soon as that was all over, their dividend got reinstated and they raised it like crazy from 30 cents to $1.01. And right now it's $1.31. So hey, that's ticker symbol DRI. And let's go ahead and check out the next dividend stock. All right, so this dividend stock right here is a bit more risky, and you probably have not heard of it, but it's actually ticker symbol MED or Medifast. And look at the price on this one. It is not good at all. I said the 2020 pandemic low. This one is a smaller market cap of only $800 million, but they're yielding 9% right now. 8.99%. So let me go ahead and show you some of the numbers here. Again, this is one of the more risky ones, but I like it because they're profitable. They're making net income, and it's not growing like crazy. It's actually slightly down, but they still have a lot of money to pay the dividend. And so look, 30 million in the most recent quarter, operating cash flow basically flat from 1 year ago, because this is the number we want to look at. So $43 million. Last quarter it was 64, but now it's 40. So their dividend only cost them $17 million or $18 million, and that's actually down from 1 year ago. Look, 1 quarter ago it costed them $19 million. Why? Because they've actually been buying back a little bit of stock. So if we go to their total common shares outstanding, it's actually down from 1 year ago. It was 11 million. Now it's 10.89 million. And if we go to their cash on hand, because I like checking that, $147 million. They're in a great position. $147 million of cash, and their dividend only cost them $17 million. So they have multiple, I guess, years of cash on hand to pay their dividend out to. So yeah, obviously this one's more risky, smaller market cap. We don't know about the growing numbers. But yeah, this one could be a potential buy if you like to be a little risky. And hey, if y'all are enjoying the video so far, make sure to hit that like button. It really does help out a lot. And we're going to go ahead and get into the next dividend stock. All right, everyone. So this dividend stock is a little bit more interesting because if you like dividends, well, they actually pay something called special dividends. And that means they have so much extra money that they decide to pay an extra dividend to the shareholders just cuz. So if we actually go to their dividend history, if you see this little special dividend here of $1, and they do it all the time. Here was another special dividend for $1.50. Imagine that you just get a free dollar per share every once in a while just because the company makes so much money. So this one is a little bit more risky because again, you're in the oil and gas, crude, natural gas industry. And I get a lot of people don't want to invest in there, but the financials look great. So let's look at them. So net income is down from 1 year ago, but if we go to their total revenue, it's also down. So, but we want to look at the assets to liabilities ratio. And that ratio, it was 41%, 41.5. Now it's only 36%. And the assets have grown from 1 year ago. So when we start seeing that in a company's balance sheet, that's great to see. And if we go to their operating cash flow, because this is a more important number, it's looking great. It's up from 1 year ago, 2.28 billion. So remember, $2.28 billion, and their dividend only cost them $408 million. And why was this so much back here? That's because they were paying out those special dividends. This includes the special dividends they paid. So the normal dividend of 2.9 or 3% only cost them $480 million. And obviously they can raise that. They could double it, triple it if they wanted to. And if we go to their issuance retirement of stock program, in the 2 most recent quarters, they've just been buying back their own stock like crazy. 317 million and then $293 million. So I love when companies do this. This one makes this a great dividend stock. And total common shares outstanding, they have less than a billion shares outstanding. So it was 586 million. Now it's 582 million. And let's go ahead and look at their cash on hand because I like looking at the cash on hand. $4.76 billion. It's looking great. So yeah, they can milk farm that or, do whatever they want with the acquisitions. So yeah, that's ticker symbol EOG. Let me know your thoughts on this one. I just love it because they pay the special dividends, and I'm sure every dividend investor would like that too. So yeah, that's ticker symbol EOG. All right, guys. So for the last dividend stock on this list, it's actually ticker symbol CTO or CTO Realty Trust. And look at the stock price of this one. This one's actually yielding 9.24%. And what a lot of people don't know is you see this one right here. They actually own 15% of this company right here, ticker symbol Pine. This one's also a REIT, so they just own 15% of it and collect money from it because this one yields 6.43%. But let's go and dig more into the financials right here. So let's go ahead and look at the core FFO because that's what you want to look at for REITs. Here's their assets versus liabilities, but here's their core FFO of $15.69 million. And it's up from 1 year ago, so that's really good to see. So $15.6 million, and their dividend only cost them $9.74 million. So that's good to see. And remember, REITs have to issue a lot of shares to raise capital, but not these guys. So if we go to their total common shares outstanding, besides 3 quarters ago, it really hasn't gone up. It stayed at $22.69 million. Well, and they've actually been slightly buying back some of their own stock. Like last quarter, they bought back $4.77 million of their own shares. And remember, for a market cap of only $373 million, if you buy back $5 million of stock, that's actually really good. Now remember, this one is more risky. It's at a smaller market cap, but I really like it because they actually own, like I said, 15% of Pine. And we'll go ahead and look at the numbers just because we're having fun here. Core FFO here of $8.3 million. Looks like it's the highest it's ever been right here. So that's cool to see. So $8 million, dividend cost $4 million. So they can easily afford that. Issuement retirement of the stock. Okay, so they haven't been having to issue too many shares. But yeah, that's ticker symbol Pine. Let me know your thoughts on these REITs in the comments. Remember, nothing's financial advice. Do your own research. I'm just some random YouTuber. Don't forget to hit the like button. It really helps me out a lot. And I hope you guys will watch one of my other 2 videos up here. And hope you guys have a great rest of your day. My name is Nathan Robert.